folks, welcome to Best Stock Charts for the coming week. This is where we review the swing trades that we're looking to put on for the coming week. This is Bob Desmond, and let's talk about what we're going to go over today. What we're going to go over today are the trades that we took off the table last week. We'll talk about our performance. We'll talk about the performance of the best stock charts I went over last week to see how we did. And then we're going to segue into the new swing trades we're looking to put on for this coming week. Now, the goal here is to do our homework, get prepared for the coming week, because most traders, the reason why they lose money in the market is that they have no plan, and you must have a plan, and that's what we're going to do today. So let's kick things off with a review of the trades that we took off the table. Our performance last week was as follows. We booked profits on 4 positions, no losses last week. Overall, our average return last week is 5.27%. On the 4 trades, that's an annualized return of 274%. Now, the first chart we're going to go over is a short that we put on of STAA Surgical. Now, I didn't talk about this one on Best Stock Charts last week. It just hit our screener midweek, and I'm going to do a post-trade review of STAA Surgical, and in fact, probably all of these trades today in the coming days. If you want to have those videos sent to you, my analysis of how we entered the trade and why we booked profits, enter your email address. If you're watching this on the website, it'll be sent to you. Or if you're watching this on YouTube or StockTwits or Twitter, Seeking Alpha, follow me there. So we entered STAA Surgical because RSI, when we entered the position, was trading at about 90, just shy of. And you could see here, we entered the position on the 6th, and we booked profits right here on the 7th for a gain of 6.5%, or about $2 per share. So a nice swing trade to the short side. And this is what I like to call an extreme overbought trade. You do not want to stick around too long with these trades because it's all about probabilities, right? The probability of these shares continuing higher is pretty good because strong stocks tend to get stronger. And as I warned members, we do not plan on sticking around too long. And I'll go over my analysis of our pre-trade setup of STAA Surgical on our post-trade review. So you'll see that firsthand of what I discussed with members, what our strategy would be. The next chart up, DPST, the Regional Bank Leveraged ETF. Now, we got long of DPST right here on retest of the breakout point. We had broken out above resistance on the 4th. I waited for a retest on the 5th. We got long on this down day. The following day, we skyrocketed higher. Now, we booked half profits. We're still long in this position here on the 7th on this bearish key reversal day. Now, I'm still very, very bullish on the banks moving forward. So I plan on adding back to this position in the coming days. Now, on this trade so far, we're actually up higher now on this. But on the position that we took off the table, we booked profits of 6.2% last week, or $5.52 per share. Now, members, we're going to talk more about these positions and my opinion on the overall market on the week ahead commentary immediately following this commentary. So members, stay tuned. If you're not currently a member, sign up for the 14-day free trial offer. Next chart up that we booked profits on, half profits on, I should say, last week was Cure. This is the leveraged ETF putting you long of healthcare. Now, we had broken out back here, and we got long on the 4th. On this continuation move higher out of this trading range. And we booked profits on the 7th right here on this bearish reversal day as we hit resistance at the 150 period moving average. So this trade here was a 2.2% gain on the position that we booked profits on. We're still long, so we're actually up higher than that 2.2% now on our remaining position. So a really nice trade. We will be looking to add more since we have now cleared resistance on Cure. So members, more to come on CURE. And the last position where we booked profits on last week was SHAK. I was very bullish on it moving into the week, and I remain bullish on it, and we'll be looking to get back involved in the coming days. Now, we got long of SHAK right here on the 4th on a breakout above this upper band of resistance and out of this triangle formation. This is the power of understanding the relative strength of a stock versus the S&P 500, especially when you use the charts to identify a breakout as your best risk-to-reward entry point. And it also provides you an excellent opportunity to identify where you want to put your stop loss, which is right below support here. Or if you wanted to keep it loose, right below this lower band of support here as well. So we booked profits on SHAK on the 6th, right here, as we moved up and into the 3rd standard deviation Bollinger Band. So we booked a profit on this trade of 6.2%, or $3.79 per share. And congratulations to members who traded along with me on these trades, and I'll go over some of the other best stock charts I went over last week. And I didn't trade these trades, but a number of my members did. Now, Nu Skin was one that did not perform all that well last week, and I don't know of any members that traded it. But we did not go chasing this one. In fact, it was weak for most of the week, despite the fact that we put in a new weekly high. But what I do like here is the fact that we pulled back and we are now holding support. And we had a bullish key reversal on Friday. So while it had a poor week last week, I still like the setup here. I think that this is the pause that refreshes. And in all probability, we are going to at least retest prior resistance, if not break out above it. Now, I will warn, your indicators are rolling over. Stokes are breaking down. RSI breaking down. So a bit of a concern there. And up volume on Friday was light. So while I still like the trade to the long side, I am cautious that we may not be able to break out and above the prior high of $84 per share. The next chart up, Lululemon. I warned about Lululemon last week that it was an extreme overbought candidate. I debated whether or not to short it or short Star Surgical, which I just went over earlier in this video. Now, Lululemon did make a new weekly high, but it flashed a bearish key reversal last week. And you'll remember that last week I mentioned that we had RSI at around 88, and we were trading up and into the 3rd standard deviation Bollinger Band, and we were not going to stay there much longer. And sure enough, we rolled over. So my guess is that at best, we're going to consolidate sideways here. At worst, we'll pull back some. Do I believe that the rally in Lululemon is over? Perhaps for the next several days, but strong stocks tend to get stronger. Would I short it now? No. I think that the risk to reward is against us now, and that the time to have shorted was back here at these unsustainable levels with RSI up at around 88 and us trading above the 3rd and 2nd standard deviation Bollinger Bands, and while we were flashing topping action on the candlesticks. So I would not go shorting Lululemon. This is off of our watch list as a short candidate. Kohls Corp. A couple of members got involved with this one and booked some really handsome profits. We've been talking about Kohls Corp for several weeks, and this is a referral from one of our members, Rakesh, who made mention of it in the forum. And what a move it has had. Last week it was up 13.73% alone. So congratulations to members. I think we are overbought here. We are going to pull back. I would not be a buyer of these shares. Allow them to pull back and then get long. Might we put in a new weekly high? I wouldn't be the least bit surprised. Will it hold? In all probability, no. I think that we are going to pull back fairly soon. So I would not go chasing these shares. and they soon may become a short, not based upon a daily chart. On a daily chart, we may continue higher. Now, where I'm a bit bearish is on a weekly basis, because now we're up and above this third standard deviation Bollinger Band. Now, if we trade sideways for a week and alleviate this overbought condition, well, then, you know what? Yeah, Kohls could continue higher, and I wouldn't think to short it. I would think to buy it. But as long as we stay elevated above the third standard deviation Bollinger Band, I don't want to be involved with it, because I'll save you the technical jargon and keep it simple. We're not supposed to be here on a relative basis. The next chart up, Canada Goose Holdings. It remains a watch stock for us. We've been watching it since it broke out here. A number of members have traded it. They've made a lot of money. Now, what I'm looking at here is a stock that's showing some profit taking, right? How do I know that? How I know that is that we sold off the highs of the week, and we have this wick, this shadow, whatever you want to call it cupcakes. This line on top of the body of the candlestick is a sign that we saw some profit takers moving in. Can it move higher this coming week? Sure. But now we have a bit of resistance above, right? So what was the high of the week? The high of the week was $44.80. So just identify that as being a resistance level. If it breaks out above it, well, then you can see another leg higher. Let's talk about the daily chart. I like the setup here. We pulled back. We'll probably retest this lower band of support. We did have a bullish reversal day on Friday, but we didn't pull back to retest support all the way. So I'm not going to be the least bit surprised to see another intraday move lower to retest, let's call it $42 per share. That would be a really nice entry point for me. We closed last week at $43.23. Volume on Friday was good. It rose above average. Watch out for the MACD histogram. We're losing momentum here. That doesn't mean it can't pick up once again, but we're getting a little bit long in the tooth here. Alibaba, we spoke about this one last week. Be careful here with Alibaba, because on a weekly basis, we flashed a doji star formation. That's a sign of indecision. It's a sign that we may get a pullback. Now, on a daily basis, we did pull back, but on Friday, we flashed a reversal bar, which leads me to believe that at least at the beginning of this coming week, we may see a continuation move higher. Volume on Friday was a bit below average. Ultimate oscillator is rising. Watch out for the lower highs here on MACD histogram. I don't pay too much attention to the lines. I watch the MACD histogram more than I do the lines when I swing trade stocks. Now, new swing trades that we're looking to put on for the coming week are Central Garden and Pet. Never heard of it, but the stock chart looks outstanding as a swing trader, because we were trading in for all of 2017 and thus far most of 2018 in a tight trading range between $35 and $41 per share. That all ended last week as we pierced the upper band of resistance. Now we're going to see resistance at $43.50. Actually, $43.30. So we are very close to a major breakout on CENT. So this is a swing trade that I find very attractive. Volume, though, very, very light last week on a breakout. This needs to get resolved. We need to see rising up volume. So if there's a caution flag I had to warn about on CENT, that's it. We remain in a tight consolidation weekly basis on RSI. Stokes are rising, looking good. Members, we're going to talk more about the daily chart of CENT on the week ahead commentary coming out later today. Now, another symbol that we're looking to build upon, we're already long of it, and we're looking to build on our position rather aggressively, is USLV. We broke out last week above resistance. We have RSI putting in higher lows, no higher highs yet, but we're close to a major breakout on USLV. Volume last week, outstanding. Stokes beginning to give us an indication that they are going to break out. A nice double bottom setup on Williams percentage R with a new higher high. So USLV, which puts you long of silver, but this is a leveraged ETF, folks, so be forewarned. If you don't want the volatility, simply look at SLV, the silver ETF. Now, members, we'll talk more about the daily chart. And a bit of a concern that I have here on the daily chart before we get more aggressively involved with the shares of USLV this coming week. We'll talk about that on the week ahead commentary coming out later on today. The next chart that we're looking at for a swing trade opportunity this coming week is KB Homes. Now, the home builders have been under a lot of pressure for the past couple of months. Why? Actually, not the past couple of months, all year, because of rising interest rates. That all ended last week as we broke out above this upper band of resistance and we flashed a bullish key reversal. And we closed above the 50-period moving average for the first time since April. So some fairly good price action last week on the weekly chart. What was missing? Volume. Okay? We need to see volume rise. What does volume imply? Volume implies that we have institutional demand. We're not seeing that yet. So members, on the weekend commentary, we'll talk about the daily chart and our strategy for possibly entering a trade on KB Homes this coming week. The next chart up is Dunkin' Brands Group. I've never owned Dunkin' Brands, Dunkin' Donuts. I go there all the time. Great products. But this weekly chart is looking outstanding. We have a major breakout above this upper band of resistance. Now, we are not at an all-time high yet. So we have resistance at $67.70. We do have a breakout on RSI. Stokes are looking poised to break out as well. They are hooking back up. Volume last week was a bit light. We're going to need to see volume rise. So members, we're going to talk more about a strategy for entering this trade using the daily charts and perhaps an intraday chart on Dunkin' Brands on the week ahead commentary coming up later on this afternoon. Folks, if you're not currently a member, sign up for the 14-day free trial offer. If you want best stock charts in the future, or if you want to get our post-trade reviews, enter your email address on the website. We hate spam too. You will not be spammed. If you watch us on Facebook, YouTube, StockTwits, Twitter, you know the deal. Subscribe, follow, click that bell to get notified of new videos on YouTube. Everybody have a very profitable trading week, and I will talk to you soon. Be well.